Liquidity, liquidity, liquidity. Now we know the most important thing in the markets is actually liquidity, but the reality is most don't actually understand the importance and the true depth of liquidity and inducements in the markets. But in this video and on this channel, my goal is to clear it up for you so you are on your way to that consistent, profitable payout. So join me in this workshop where I'm going to reveal to you step by step one of my favorite trade models, an A+ prime setup known as the break, retest, inducement model. And I'm sure if you implement this in your prop firm trading, you'll be well on your way to getting consistent payouts. Now, when it comes to long-term market movements on the daily time frame, swing trading, then the market drivers are going to be fundamentals, geopolitical factors, macroeconomics. However, when we talk about lower time frame, between today's London Open and New York Open, most important thing that will drive price is actually liquidity, especially M1 understanding of liquidity. So if you're tired of bouncing from strategy to strategy, sometimes you win, a lot of the times you lose, then stick around for this video because I'm going to give you a step-by-step guide on exactly how to read inducements, how to differentiate real inducements from traps, and how to utilize them to your advantage in real life case studies, building it together step by step with a framework, rule-based and also example-based, nothing cherry-picked, everything as always from recent price action. Okay, on the screen, we have last week's price action. Nothing cherry-picked. I'm just showing you frameworks as I always do from my live trading, breaking down case study after case study. And I always show you, first of all, how many smart money traps exist. Now, smart money traps, it doesn't matter if you as a smart money trader don't take these losses. I'm just showing you the evidence. Smart money traps are abundant. They're happening constantly. And I'm not even showing all of them. I'm showing the obvious ones and how they manipulate a lot of traders. So before I get into all of these nuanced situations, let's quickly do where we are in the market. So from this quick display on the daily time frame, we can see we are in a clear bullish market where we're forming higher highs, inducement higher low, higher high, higher low, and so forth. And we're trending higher highs and higher lows. Inside of all of this price action, if you look back over the months, every single trade I've taken in here, for example, a buy setup, a sell setup, all of my trades, wins and losses of this price action are on this channel. But anyway, as we see this bullish price action climbing towards a supply level. So when we look left and say, okay, where have we arrived to on supply? We've realized we've come to a quite interesting area because number one, not only have we taken out this level, I've marked this out as liquidity. Let's actually do this as a liquidity sign. So we know this dotted line is a previous lower high in the market that went on to make lower lows. But apart from that, we have arrived to this supply zone, a lower high that made a lower low and broke this previous structure point. So when we see a bearish break of structure originating from this area and within that supply area, let's read it closely. We'll see, okay, perfect. Price came in. Not only did it sweep a liquidity point, we can see there was a sequence of inducements that happened where we have a supply zone with a inducement of this wick. And then we have this trendline liquidity buildup, inducement and BOS. And we notice that each inducement, for example, this inducement led to a break of structure, taking out this level. This inducement led to a break of structure, taking out this level. And then this area finally leading to the lower low in the market. So we find the last block and we cover the high. That is our supply zone. From the high to the last block, this becomes our supply zone. So now that we've categorized the zone, let's bring it back to current price action and we see price has arrived nicely into that zone. Let's break it down further and we'll start to see price came into that supply zone and is tapping this area. Now, notice the manipulations and trap. As we've already gathered, price was bullish leading into this supply zone. On the daily 4-hour M15, price has been bullish, forming higher highs and higher lows. What does that mean? The inducement over here plus the supply zone that is met from the lower low. Once we have this area, what do we expect? An area that is still bearish, fails to make a higher high, but when it goes on to make a higher low and goes on to make an internal higher high, once we have two legs of internal bullish structure, remember you got to learn how to differentiate internal with external structure just so you know how to trade the complex pullback. Then you'll start to have a portion once you've concluded this inducement in the market that led to a lower low in the market, taking out a previous low in the market. You've had a bearish main push. Once you've identified an inducement-led bearish main push, you identify two legs of internal bullish structure. That internal bullish trend is a complex pullback. That complex pullback is an internal trend that will continue to happen bullish until we arrive to the efficiency of the pullback. So price may come into this level and then eventually reach our efficiency of the pullback. Once we reach that efficiency of the pullback, what do we need? We need inducement supply zone, another inducement of a level, just like we are seeing right now, where we have the inducement supply zone over here and the inducement of the level we just covered. So we're starting to see this build up, bullish price action leading into the area. And then once we arrive to this supply area, what do we expect? We've had a completion of a main push internal break of structure, complex pullback, efficiency of the pullback, expecting a new main push with the trend. That is a very simple breakdown of points of interest and market structure cycles. Obviously, there's a lot more detail on the guides that I've shared, but when we arrive to this area, what do we expect? We start to expect price to break down. We start to expect build up and inducement, the law of cause and effect, and the domino effect you may remember from the inducement guide, and you start to see price shift its sentiment to start to go from bullish for the complex pullback, converting to bearish new main push. And you start to see who is leading the show. Well, you have inducement over here, build up of this level, inducement over here, build up of this level, inducement over here, build up of this level, inducement over here. So all of these inducements that are maintaining the real trend, inducement 2, inducement 3, you use the dominoes. Inducement number 1 makes the first domino fall, then the second, then the third, then the fourth. You follow market structure and trend, but you support and enhance it with inducement reading to see where is the narrative, where is the context, where is the control, where is the market going. Don't use market structure and supply and demand alone. Combine it with inducements to see the language of price, the reality of intentions. By the way, I love to share with you guys a bunch of goodies that always help me in my trading, and therefore I've prepared a few gifts for you in the description, being a risk management OS, an operating system powered by data and AI to help you manage your trades. I've been using it for almost 2 years now, and it's been responsible for my resilience and psychological control. It's a gift for you. And more importantly, the other key to my strategy was my profit taking systems, how I had data driven, optimized levels to take profit, and I've prepared the exact blueprints for you with case studies, examples, and rules on how to maximize your trading. I don't need anything from you. It's free to grab. They're in the description, both the risk management OS and the profit taking blueprints. Go grab them. They're there for you. Now let's get back into the video. But this is exactly the framework I'm following, a very simple higher time frame read where we are just trading main push, allowing the bullish complex pullback to complete and looking for the new main push. Basically low, lower high, lower low, breaking it down with a lot more detail. However, so when we see this happening and we arrive to that zone, that supply zone over here, and we notice we've taken the first liquidity point and we've arrived to the supply zone. Just like here, the first liquidity point is taken and we've arrived to the supply zone. So in our diagram, what we are seeing right now in price action is literally right here in the apex of that supply zone. Now we have to read, as we arrive to the supply zone, the shift in control. We need to see bullish control coming up and then arriving to the supply zone and conversion, going from bullish control to bearish control. When we see that conversion, we are starting to see distribution in price. We are seeing the buyer strength turn into seller strength. How do we know that's happening? We see a rounding off in price, reactions and inducements and traps and manipulations, and these local conversions are the big players and institutions laddering in their orders, shaking out the buyers and leaving the institutional intent ready to melt, ready to go bearish once we see that final UTAD from Wyckoff theory. You'll remember the distribution schematic. And that's exactly what we are seeing. As we arrive to the supply zone, it doesn't just arrive to the supply zone and go down. No, it distributes price. The first thing you have is an upthrust. That upthrust is that first grab of liquidity. And after that first grab of liquidity, we have another sweep. So when we see that we grab liquidity, swept into the supply zone, this is the early sellers getting in. And what do we see? Domino effect. One inducement leads to another, leads to another. So that first inducement leads to another, where we read it closely and we start to see, okay, after the first inducement, we see Asia high build up, another inducement, bearish. So when we saw inducement leading to a bearish break of structure, inducement leading to a bearish break of structure, who was in control? Clearly the sellers. But then we see again, build up, inducement, push down. So sellers are maintaining control. We're seeing that domino effect, and following that sequence, we're seeing everything correct. We're seeing inducement, 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 break of structure, break of structure. So everything is in the right order, but we have to realize the market is not often tap and go on higher time frame daily zones. Price distributes. So we have got the early sellers in, early liquidity in, and where their stop loss is going to be. They're going to be on the very obvious areas. Now, if you were a supply and demand trader, where would your stop loss be? Where it would be the lower high that made the lower low. So stop losses are going to be here. What about this one? A lower high that made a lower low, stop losses are going to be here. What about this one? A lower high that made the lower low, stop losses over here. So we can see supply zone liquidity is all in these areas. Number two, all of these areas are equal highs, smart money sweep. Equal highs, smart money sweep. Equal highs, smart money sweep. So where is the smart money liquidity going to be? Say it with me now. Over here, over here, and over here. Smart money trap liquidity. So we're seeing market structure liquidity, supply and demand liquidity, smart money liquidity is all in this area. What about trend line liquidity? Well, it's very clear once again. We have one touch of a trend line, two touch of a trend line, three touch of a trend line, liquidity. So all of that trend line liquidity is getting presented. Not even to mention the blatant obvious. For example, a left shoulder, head, neckline, right shoulder, break, test the neckline, head and shoulder pattern, obviously becoming liquidity also, support and resistance, the whole shebang. Everyone is liquidity right now because they haven't read intent of distribution, intent of control. So once we have this inducement of control, what happens? Price now breaks structure. It breaks over here, the lower high that made a lower low now makes an internal higher high, and we start to see buyers take control. What happens at the first smart money zone? Bearish reaction, take them out. Next smart money zone, bearish reaction, consolidation, triple top. What happens? Break of structure right here, and then take them out. The next one, the next false supply zone, as we identified, smart money zone, supply zone, all false, gives a bearish candle, reaction, and then taking them out once again. So when we see all of these areas getting manipulated, I'm not even going into the internal traps. For example here, build up of liquidity, sweep, push out. What happens? All of this becomes liquidity, smart money trap liquidity. Liquidity is all over the place. Smart money, supply and demand, market structure, EMAs, Fibonacci, support and resistance, head and shoulder. Everyone's liquidity is getting involved in these areas. So when we see price eventually comes deeper into the supply zone and does this violent move, this real inducement in the supply zone, we have taken out all of these liquidity pools on the left. We've taken out all types of strategies. Everyone's got targeted. And then what has happened? When people have started to see, oh, we've seen a low in the market causing a high in the market. What are they seeing? They're seeing prices now bullish. We've had a higher high in the market. This was the previous high in the market. This is a low in the market. This is a high. People are now seeing break, test, continuation. Breakout traders, market structure traders. The narrative is now buyers are in control. So where are these liquidity pools going to be? Well, it's going to be on these demand areas, on these equal lows, sweep, trendline liquidity, sweep. Breakout traders are going to be on this resistance level, turning into support, all kinds of liquidity. What does the market say? It says, thank you very much for the liquidity. I've taken all your stop losses and I'm going to take more now here. So then it shoots lower. And this is where the law of cause and effect and the domino effect begins. One domino leads to another, leads to another, leads to another. After the real inducement into supply zone, we see another one, build up, inducement, mitigation, second inducement. And we're starting to see the targets now. We're starting to not only make lower lows and break structure, we're targeting clear trendline liquidity where we have one touch, two touch, London session, taken out. Liquidity is everywhere. Doesn't matter your strategy. You will always be a victim if you are following coincidental, hindsight, broken clock style strategies that are not causations in the market. They are correlations. Correlation is simply something like a broken clock. It works from time to time. Inducement is the causation in the market. Liquidity causes the market to move. If you read liquidity, you can make your trendline strategy better if you apply inducements. You can make your smart money strategy better if you apply liquidity and inducements. Any strategy is better if you're using primary drivers, first principles, causative factors in the market, that is liquidity and inducements. Now back to our diagram. Once we have seen price has completed its purpose, it's done its full distribution, it's come into the supply zone, induced, and then is doing the dominoes and dominoes. What do we expect now? We zoom out and we expect price to go on and make a lower low. We've had price come into supply, convert and distribute, and now go on to make lows in the market. So now that we know that's the direction of the market, we just need to see sellers' inducement of control to maintain that intent. Now, this is stuff you already know. This is nothing new. This is something I've been sharing for years, but now I want to show you my favorite trade model, and it's only in this context. When you arrive to a higher time frame supply zone, you get the distribution, you get the bearish reactions, and you get the inducements of control. This is where you find key setups, and because you're at the supply zone, you're high up, you're in premium, these are the best areas to be selling because then you have the market flow on your side. So now that we've established the higher time frame read and we've understood the distribution is happening in this area, let's take a closer look to break down the trade model that is my preferred A+ setup in these market conditions. It's when I get into a closer look, we're breaking down exactly this distribution where it is diagram perfect, what we're seeing in price action. And the idea is you have your complex pullback where you're forming the higher highs until the supply zone. So you're bullish until the supply zone and you're grabbing liquidity and coming into supply. Then you trap the early sellers. You're getting those early distribution movements, and then you get the inducement of control in the supply zone. That is also our UTAD in a Wyckoff theory distribution schematic. After the UTAD, you're expecting the domino effect to go bearish from market structure, supply and demand, and inducements of control. You want to see the sellers take control. So not only do we get a bearish break of structure, this higher low that made a higher high now makes a lower low. And after that bearish break of structure, we start to see another build up, another inducement, and another lower low in the market. This is showing me continued bearish inducements, bearish control. And this is where the magic happens. So this is everything we've covered so far, but the next portion is the strategy. This is when we get into the break, test, inducement model. So this is where we have a bearish control established from a supply zone with an inducement and a bearish break of structure, and then a follow-through inducement and break of structure. When we see the sellers are clearly in control, we're having that bearish narrative switch, and the last higher low that made the higher high in the market, this bullish impulse has now had a bearish lower low, and we've officially had a higher time frame break of structure. When we've had this, now I know we're in action, because now I know we can go all the way down to make a lower low. As this main push was bearish from the initial supply zone to lower low, we had a bearish impulse. We can now expect the same thing to happen. So we just want to find an entry in premium somewhere at the highs in supply zone, and we can have a wonderful opportunity with the trend to go on and trade that flow. And as long as you are trading in premium, meaning from the lower high to the lower low, you pull a Fibonacci, as long as you are selling above the 50%, you are in a great opportunity. But obviously refine it with inducements and market structure on a lower time frame, with liquidity cycles, structure cycles, and daily cycles with inducement and lower time frame confirmation. My 5 most important things, but most importantly, my trinity of time, lower time frame confirmations, and inducements. The 3 things I always preach. But getting back into the main diagram, this is where I need your focus and attention, because we need to identify, once we've had supply zone and inducement and market structure shift, I need to find a local support level. Now that local support level, as any support level, is just 2 or 3 or 4 touches. The more touches, the better, before we had the break. So over here, I can start to identify. We had 1 touch, 2 touch, 3 touch on this support level. And most importantly, after the break of structure, after we had the lower low, this support level now became a resistance level. Let's do it in red so we know what it is. Well, we have multiple touches now on the same support level, now respecting it and rejecting price. What was once a previous floor in price action, a support level, has now converted into a ceiling where price can no longer break it. We have 2 touches here. So when we see that conversion after the break of structure, that's the key, that is led by an inducement, we have a bearish push in the market, ideally from multiple inducements, higher time frame supply after a distribution schematic. When we see that bearish conversion, bearish switch, we need to find which support level has become resistance level. When we see that, we can start to now identify there's a few things going on here. Because number one, we are starting to see the signs of the structure cycle where we have lower high that makes a bearish impulse, lower low. After that main push, what do you expect? 2 legs of bullish to make the complex pullback, efficiency of the pullback, lower low. That's the structure cycle. So we need to see that in action alongside the liquidity cycle, which is build up, inducement, and then mitigation bearish. So if we could see that once again, we're connecting our liquidity cycle, structure cycle, then we add on our daily cycle for the confirmation. So this is exactly what I'm seeing. I'm seeing the structure cycle with the main push and then the complex pullback, which is going to become liquidity. And I found my support level that turned to resistance. Now, this is where the key begins. If I could start to see a medium inducement after this support level that turned into resistance, if I could see a complex pullback, bullish complex pullback continuation, and then this resistance level that was a previous support level now getting induced. Once I have that inducement, if I can find lower time frame confirmations in a daily cycle variation, this becomes my perfect entry, because now I'm connecting everything that I like. I'm connecting bearish market structure and inducement, inducement, bearish, inducement, bearish. Once we have the inducements of control, the domino effect, then I see support level turn into resistance level. Once I see that, I see the complex pullback, medium inducement of that resistance level, time window, lower time frame confirmation, A+ setup to make a new lower low, and that is with the trend in premium in supply. If we find this setup, this is an A+ setup you will always take. Now that we have the theory, the overall context, and the zoomed in explanation of the trade model, let's break it down a little bit further. So back to our price action read, we've started to see the first sign, which is inducement into supply. Once we see that, we see the secondary inducement and then overall break of structure. This last higher low demand area, this is now having the break of structure we needed. Now the price action is getting a little chaotic, so I'm going to delete everything we don't need because we've covered all of this, and I'm only going to focus on what we need to focus on, which is the inducements of control in the supply zone, which we have found, and the bearish reactions, which we have found. So we have seen that this inducement over here not only broke recent structure, M15 structure, but also overall higher time frame 4-hour structure. This is the higher low that made the higher high. This is the M15 push. This is the recent low in the market. When we see that the inducements are coming in multiples, we have one over here and a second one over here that are leading to significant breaks of structure, we're starting to identify the beginning signs of the trade model, which is price comes to the supply zone, induces, and then breaks local structure and 4-hour structure, with a inducement controlling that. Once we see that, which we have, we find our support level that turned into resistance level. So let's go find that. So when we see that bearish reaction is happening, led by inducements, now I'm starting to build out this framework and I see, okay, my support level is around this area where we have 1 touch, 2 touch, and price coming and breaking it over here. Okay, so now that I've found a clear support level, that after that inducement of control into the supply zone has led to this lower low in the market, now I've seen inducement-led break of structure and breaking our support level, and I need to see, did that support level become resistance? And this is where the next portion of our breakdown happens, and that is looking into, after the break of structure, we get a complex pullback. So we expect internal price action to be bullish, but I want to see, am I seeing any signs of trap, resistance, liquidity? And this is what I'm aiming for. So breaking it down, of course, we can see all the liquidity pools. For example, these equal lows, this sweep that led to a higher high, breaking down in the New York Open, smart money trap over here. Then over here, we have equal highs, sweep, bearish break of structure, inducement, bearish, all of this area becoming smart money trap and getting induced. So all of that smart money trap aside, I'm going to delete it because it's not super important for now. I just want you to learn the setup, not every single detail that we use. I just want us to focus on the idea that we are getting a low in the market that had a bearish break of structure and we are forming the complex pullback. And we can clearly see price is respecting this resistance level where we're having a bunch of touches over here, another touch over here. And this is where we're starting to see the setup take shape, where we saw the previous support level with multiple touches after the inducement into supply zone, secondary inducement, break structure, make a lower low, and now respect that same level as a resistance. Once I see this forming, the next day I am looking for a daily cycle variation, medium inducement, and my trinity, and this is where the action begins. Now I can drop down to home, which is the M1 time frame, and I'm looking for the rest of my criteria, which is going to be, as I approach that resistance level over here, I already know it's a smart money trap zone that we just covered. I already know high of previous day liquidity is this smart money trap zone for the reasons we mentioned, and price is tapping into it a bunch. So sellers are getting activated, smart money traders are getting activated, and then that resistance level that we're speaking about aligns with Asia high. So high of previous day, Asia high, and smart money trap are all the same level. So when we induce that level, that is an amazing medium inducement, and we want to see that medium inducement play out, which we see. Price shoots up, gives us this medium inducement. However, this has happened around the Frankfurt Open time, so I don't give it full trust. And when I realize that as we approach my London Open, this also becomes a form of liquidity and the real inducement is over here, I see that real inducement. And after that inducement in London Open, what do I see? I see lack of efficiency of the pullback. There's no efficiency of the pullback yet, which is a clear invalidation. If you don't know what that is, check the guides I've made about it. But we're starting to see now, we're getting a medium inducement of Asia high, high of previous day, smart money trap, and the support level turning into a resistance level. We're getting an inducement of that, and then we're getting our perfect lower time frame confirmation, which is one leg, second leg, and on the minute, no jokes, on the minute of London Open, the power of key time windows, when I get exactly on the minute of London Open, I'm mitigating the exact zone I need, the second leg of the 2-leg protocol, because now we are getting 2 legs of bearish intent after the inducement. One, where we get one bearish leg over here, second bearish leg over here, not touching the efficiency of the pullback, which is an invalidation. This becomes a perfect 2-leg protocol, covering the high to be safe, and our break-even protocol after a M1 shift. So after this point, we break even our trade. And as always with A+ setups, you do the 1 to 3, 1 to 10 partial protocol. So you have at 1 to 3 risk reward your TP1, and at 1 to 10, we cut our trade out for our TP2. So when we have everything locked and loaded, we have entry, break-even protocol, TP1, TP2, everything predefined, and then we let the higher time frame read the inducement, daily cycle, everything we've covered, do the heavy lifting, because we know we have not only Asia low to target, we have this trend line liquidity to target. Not only that, we have this complex pullback to target because we've had a medium inducement, and we're just following the framework, which is support level turning into resistance level. After the break, we come back to test it, we induce it, medium inducement, then you add in time window, lower time frame confirmation. So as always, it's the same connections, time, lower time frame, inducement, but we're connecting with this trade model, which is we look for a support level, turn to a resistance level after the break. After that break, we test that level, induce that level, time and lower time for confirmation, looking for a lower low. Simple as can be. A plus setup, take it 10 times out of 10, and then you let the markets do the rest. And the power of this is we are reaction traders, predominantly intra-session traders. So when I see price comes into my level, does the inducement, London key window on the open gives me my entry. This can't be fake. This is dream work on the minute. And we know that the average session volatility of a GBP USD or a Euro USD is about 25 pips. So in this London open, I'm expecting a 25 pip movement. And if I have a 5 pip stop loss, my 1 to 3 is going to be within 15 pips, well within my average session volatility, which is why within the space of 1 hour, I'm break even and TP1. Immediate feedback loop, quick reactions, no room for consolidation, heavy retracements, and all that psychological roller coaster of emotions. This is quick and easy. And after that break even and TP1, which is met at the 1 to 3, we allow the market to do the rest. And what do we expect? Price to continue bearish, comes to the trend line, invites in more buyers, takes them out, and it's going to be happening again and again. And we notice who is leading the show. No surprise, it's going to be build up, inducement, build up, inducement, build up, inducement, and again and again. And there we have it, like clockwork. Price in the end reaches our 1 to 10, trips over to the next day, which is not ideal, but again, this is a hybrid swing trade. We don't capture the whole move, we capture the highest probability portion of the move as session traders, but we allow the higher time frame to give us clear context, and we see our clear 1 to 3, 1 to 10 met, and more importantly, inducements leading the show, where we get, as always, these inducements that I mentioned, but moreover, we have another build up, another inducement, push down, build up, inducement, push down, whilst we hit the trend line to invite in buyers, narrating the trap we already mentioned. So this trend line liquidity that we already mentioned, reacted, failed. What about the next trend line liquidity of the complex pullback? Yes, you expect it to hold to allow the complex pullback, but once you have the medium inducement, 1 touch, 2 touch, 3rd touch becomes liquidity. And we know that because the inducement took control. No POI, no market structure, no supply and demand, no Fibonacci, inducements, especially with this trade model of a support level, break, testing to become a resistance level, inducing lower time for confirmation time window, all of the checklists we spoke about to lead to a perfect setup, not cherry picked. I've shown this multiple times on this channel. If you want more clarity on this trade setup with the exact same rule basis I already covered over here, I've done videos on this before. Go check those other videos where I break it down with more case studies so you can really solidify the concept. And again, make sure you watch this whole channel. I'm giving guides on everything. There's no excuse to not be a profitable trader if you watch this channel. You digest all the information with case studies, diagrams, example after example, full explanation of each topic and each component of your trading, bringing it together and showing you the reality of trading that is a restricted trader is a profitable trader.